Hi everyone, welcome back to Saheb Academy. Today in this 12th video of internal reconstruction, we are going to solve our 10th problem, and the question is from ICAI study material, practice question number 10. The name of the question is Green Limited. Alright, now the interesting thing about this question is here in the adjustment, in the scheme of reconstruction, you will see specific individuals are given. Yeah, the question is talking about specific individuals. So how you have to do, what is the technique of this question, that is what we have to understand. Now similar question we have solved previously in 7th video of this chapter, right? The name of the question was Repair Limited. Yeah, there also individuals were there, and it was a difficult question back then in your old syllabus, but now you have got this question which is a bit simpler, right? So let's get back to this question and let's understand this technique once again. Let's begin. Now see here, let's just read the question. Green Limited had decided to reconstruct the balance sheet since it has accumulated huge losses. Okay, the following is the balance sheet of the company as at 31st March 2021 before reconstruction. Okay, balance sheet has been given. Let's just see what do we have over here. See, first share capital, note number 1, 65 lakhs. So if we see over here, we have 50,000 equity shares of rupees 50 each. That's the face value. So that's 25 lakhs. And then we also have 1 lakh equity shares of rupees 50 each, but they are partly paid up. See, 40 paid up, which is 40 lakhs. Okay, fine. Then we have, see, reserves and surplus, note number 2, negative 20 lakhs, which means debit balance of profit and loss, isn't it? Yes, simple. Then we have, see, long-term borrowings, note number 3, 15 lakhs. If we come to the long-term borrowing note, see here, secured 12% first debentures, 5 lakh, and then 12% second debentures, 10 lakh. Now what does this mean, first debenture, second debentures? See, it's really simple. First debenture means they have the first priority and second debentures have second priority. It is important when, you know, liquidation comes. When liquidation comes, who will get the money first? The first debenture holders, and then the second debenture holders will get the money. Okay, it's important in regards to that. Is it clear? Okay, next we have, see, current liabilities, trade payables, 5 lakh. Okay, fine. And then come to the asset, non-current asset, property, plant and equipment, 45 lakhs. In PPE we have building 10 lakh, plant 10 lakh, and then computers 25 lakhs. Okay, and then intangible asset, note number 5, we'll have goodwill always, right? So goodwill, see how much, 20 lakhs. Okay, this we will write off anyhow. Even if the question doesn't say, we will write a note down below and we will write it off. It's up to us. Okay, you can also leave it as it is if question doesn't say anything. Fine. Okay, then current assets, nil. Okay, no current assets, nothing. Now let's just come to the scheme of internal reconstruction. If we see the scheme of internal reconstruction, see here, the following is the interest of Mr. X and Mr. Y in Green Limited. This is what I was talking about. The question is talking about specific individuals. They are saying, see, Mr. X and Mr. Y has this much interest in our company, right? See, Mr. X is debenture holder. Yeah, first debenture holder, second debenture holder, also our creditor. Yes, and then he's also our shareholder. Is it clear? And same with the Mr. Y also. So they have interest in our company. Now regarding them, what is the adjustment? Let's just see over here. See here, the following scheme of reconstruction is approved by all parties interested and also by the court. Okay, the first adjustment, see here, uncalled capital is to be called up in full. So that means, see, we have no, where is uncalled capital? You see, this is the uncalled capital. 1 lakh equity shares are there, 40 paid up. So remaining 10 rupees we will call. Okay, and we will receive all of it. Fine. So that's what we will do. That's the first adjustment. And such shares and the other fully paid up shares be converted into equity shares of 20 each. So what is happening? Reduction in the face value of both of this 50,000 equity shares as well as 1 lakh equity shares. Both will be getting reduced to 20 rupees each face value, right? That's the first adjustment. Fine. And then the rest of the things we will see as we solve, right? So first let's just start from over here. So see here, you are required to draw the journal entries to record the same and also show the balance sheet of the reconstructed company. Okay, we'll do the balance sheet after doing the journal entries. Fine. So let's do the first adjustment first and then we'll do everything. Okay, let's just start the solution. Now see here we have the solution. Let's understand how we are going to pass the journal entries in the books of Green Limited to carry out the scheme of internal reconstruction. It's really simple. First adjustment was what? See here. The first adjustment, uncalled capital is to be called up in full. Yeah, we have to make partly paid up shares into fully paid up. Yes, so how many shares are partly paid up? If we check in the question, we have 1 lakh shares which are partly paid up. Yeah, so how much can we call to make them fully paid up? 10 rupees. So 1 lakh into 10, that's 10 lakh. Let's make a call of 10 lakh and receive the money. Yes, that's what we do now to make them fully paid up. Yes, so let's make a call. Share final call account debit 10 lakh to equity share capital account 10 lakh. Really simple. Easy? Yes. Then we will receive the money. So we have to debit the bank account 10 lakh and then we have to cancel this dummy temporary account called as share final call account by making an equal credit to share final call account. Simple, easy. So shares are fully paid up now. Yeah, both capital over here are fully paid up. Is that clear? So now this is not 40 lakhs. This is how much? 1 lakh into 50. This is 50 lakhs. So in total, what is our capital now? In total, our capital is 75 lakhs. Isn't it? 25 and then here 50. So 75 lakhs is our capital. Is that understood? Simple. Then what? Then they are saying in the same adjustment, yeah, uncalled capital is to be called up in full. Yes, we did that. And such shares, yeah, such shares mean just now what we did now, they are referring to that. They are referring to that 1 lakh shares and the other fully paid up shares. Other fully paid up shares means the 50,000 shares. Yeah, other fully paid up shares means 50,000 shares which were fully paid up from the beginning. Yeah, they are talking about both over here. Be converted into equity shares of rupees 20 each. Their face value is 50 currently. We have to reduce that to 20. Yes, so how much reduction should happen? 30 rupees face value reduction should happen. Yes, so now what we are going to do? We are going to completely scrap off, cancel the old capital, both. Yeah, 75 lakh entirely we will cancel. So see, it's really simple. We will debit equity share capital account by how much? By 75 lakh. How 75 lakh? Just now I explained. Yeah, both. 50,000 shares into 50, 1 lakh shares into 50. Is that clear? So entire capital we have to cancel because both are being reduced face value to rupees 20. So 30 rupees reduction, no? So we cancel the whole capital and then we will create the new capital. See here, 2 equity share capital, 50,000 shares plus 1 lakh shares into 20. Is that clear? The new face value. So that comes out to be 30 lakhs. Then whatever is the difference, that will go where? That will go to capital reduction, which is a gain for us, 45 lakhs. Is it clear? Simple and straightforward. So we are done with the first adjustment. Clear? Yes. Then what is happening? Then see, they are saying the main specific individual point. See, Mr. X is to cancel 7 lakh of his total debt other than share amount. Now here specifically they are saying other than share amount. So we are going to exclude their share capital from the calculation. Okay, see here, let's just see who is this Mr. X. See, Mr. X, here the data is given. Understand, Mr. X is our first debenture holder, second debenture holder, creditor and equity shareholder in both classes. Yes, but we are going to forget about the equity shares because here they have exactly mentioned that other than share amount, nothing is there regarding that. Okay, so whenever such thing happens, specific individual comes, first what do? Yeah, if you have watched the 7th video, Repair Limited, you would know we transfer their interest in our company to their personal account called as Mr. X account. Okay, Mr. X over here, let's just say here Mohan was given, then we would have transferred to Mohan's account, like that, right? Everything becomes easier after that. So I have written a note regarding that. See here, understand, whenever a question talks about a specific person like Mr. X over here, who is our debenture holder, creditor and shareholder, then make sure you transfer their interest to a personal account of that person and then do the internal reconstruction. So how we are going to do that? Really simple. See, how much we have to pay to Mr. X right now? We have to pay him 12 lakhs. Yes, 3 lakh debenture, first debenture are there, 7 lakh second debenture, and then trade payables also 2 lakh, isn't it? So we are going to cancel all these liabilities in our books and create a liability to Mr. X of 12 lakh. So how that will happen in journal entry? Really simple, understand. See, we are going to cancel the liabilities. First debentures, second debentures, trade payables, all these liabilities are due to Mr. X. So we are going to cancel all those liabilities and transfer that liability to Mr. X personal account. Yes, to cancel the liability you have to debit them, right? To create a liability, to increase the liability, you have to credit to Mr. X, like this. Now this means by this entry we are accepting that we have to pay 12 lakh to Mr. X. Do you understand? See here, we have to pay how much? 12 lakh to Mr. X. That's the interest of Mr. X in our company. Then what? Then what's the question is saying? See, then question is saying B adjustment, Mr. X is to cancel 7 lakh of his total debt other than the share amount. Yeah, share amount we have not included only in our calculation. So 7 lakh is foregone. We don't have to pay 7 lakh to Mr. X. Yeah, it's waived off. So that means that is our gain. No, we don't have to pay. That is our gain. Where this 7 lakh will go? Capital reduction. We are going to reduce liability by 7 lakh and this gain will go to capital reduction. Yeah, that's the entry you have to pass. Really simple. See here, make a flowchart and understand this properly. See, 7 lakh has been waived off and this will go in capital reduction. For this you have to pass an entry. What entry? See, really simple. Mr. X account debit, liability is gone. We don't have to pay 7 lakh to Mr. X. Debit the liability and cancel 7 lakh and that will go to capital reduction account. Is it clear? Really simple and straightforward. Then what the question is saying, let's just read. See here, and to pay rupees 2 lakhs to the company. Oh, Mr. X is paying us 2 lakhs also in this transaction. Yeah, we asked him to pay us 2 lakhs. So see, he has brought in 2 lakh cash, right? Let's just pass an entry for this. Let me just show you. If he has brought the money, then what will happen? See, this is what will happen. Bank account debit, we have got the money 2 lakhs and Mr. X liability has increased even more, isn't it? Yeah, he has brought the money, no? So bank account debit to Mr. X, like that. So now our liability to Mr. X has increased by 2 lakhs. Yeah, because we have got money from him. Is that clear? This is what has happened. Okay, so we are doing piece by piece this adjustment. Always do that. Don't do everything in combination. You will make a mistake. Okay, then they are saying, and to receive new 14% first debentures for the balance amount. What do you mean by balance amount? See, first 12 lakhs we had to pay him, right? 7 lakh was forgiven. It was waived off, foregone. So what is the remaining portion then? Remaining portion is 5 lakhs. Yeah, 5 lakhs we have to pay them. But then what happened? But then we asked 2 lakhs from him. Yes, so we got 2 lakhs from him. Now how much we have to pay him to Mr. X? 7 lakhs. Do you understand the logic now? 7 lakhs we have to pay to Mr. X. So now for this 7 lakh we have to give what? Debentures. Yeah, we have to issue new debentures to this Mr. X. Did you understand? Yeah. See here, we issued 14% first debentures of 7 lakh. How the calculation happened? Really simple. 12 minus 7, 5, right? And then he brought 2 lakh cash. So his interest increased. So for this balance, we are issuing him 7 lakh debentures. Is it clear? Simple and straightforward. Now let me just show you the entry for that. See here, really simple. We saw the 6th entry. Yeah, we got 2 lakhs from Mr. X and then we have to issue him debentures. To issue debentures, it is really simple. Debenture is a liability, right? If you are issuing, that means it is increasing. So you have to credit the debentures to 14%. First debenture 7 lakh. To whom you have issued this? To Mr. X. How much? 7 lakh. Okay. So X account is completely cancelled now, right? Yes. Okay. So B adjustment is completely done. You understood this adjustment? We did this piece by piece. Okay, fine. Next adjustment we have is of Mr. Y. Okay. Now who is this Mr. Y? See, come over here, Mr. Y. Mr. Y is also the same like Mr. X. First debenture holder, second debenture holder, our creditor also, and then our equity shareholder also. But other than equity shares, they have said we are going to exclude the equity shares from the calculation and everything, right? We are only going to focus on this debt, right? Okay, so see here, Mr. Y, 12% first debentures are there of 2 lakh, 12% second debenture are there of 3 lakh, and trade payable 1 lakh. In total, how much we have to pay to Mr. Y? 6 lakh, right? Now what we are going to do, specific individual is coming, no, in the adjustment. Whenever like this happens, what do we do first? First we transfer all the liabilities to their personal account. Yeah, whatever interest is there of that person, we transfer that to their personal account, to Mr. Y account, right? So how that will happen? The same way, we are going to debit all the liabilities, 12 first debentures, 12% second debentures, and trade payables, 2 lakh, 3 lakh, 1 lakh. 2 plus 3 plus 1, that is 6 lakhs. So 6 lakh will go to Mr. Y account. So in our accounting books, we are accepting that we have to pay 6 lakhs to Mr. Y. Yeah, we have to pay how much? 6 lakhs to Mr. Y. See here. Is it clear? Yes, simple. Now what? Now the question is saying, see, Mr. Y is to cancel 3 lakh of his total debt. 3 lakh he is cancelling other than equity shares. So 3 lakh if he is cancelling means that is our gain. We don't have to pay him 3 lakhs. Yes. So that 3 lakh will be our gain, and we are going to take that gain to capital reduction account. Yes. So see here, really simple. Mr. Y account debit to capital reduction. What is the logic? The same logic. Yeah, liability we have reduced. That is why we are debiting the Mr. Y account by 3 lakh. And then gain is happening. That gain is going to capital reduction account. Simple, easy. This happened. What about the remaining 3 lakhs? Yeah. Out of the 6 lakh, 3 lakhs is waived off. We don't have to pay 3 lakhs. But what about the remaining 3 lakhs? The question is talking about that. See here. Then they are saying, and to accept new 14% first debentures for the balance. Yeah, balance is how much? 3 lakh. So we are issuing 14% first debentures of 3 lakh. So that's really simple. Now the same, this sort of entry we will pass, which we have done for Mr. X. Mr. Y account debit to 14% first debentures. 3 lakh, 3 lakh. Isn't it? Debenture is a liability. We are issuing the debenture. Debentures are increasing. Credit that. Debit would be what? To whom we are giving the debentures? To Mr. Y. Debit will be Mr. Y. Okay. So Y account will be completely cancelled now. See here, 6 lakh got credited, then debit of 3 lakh, and then again debit of 3 lakh. So Y account cancelled. Like that, X account also got cancelled. Fine. Ultimately, there will be what? You know, the rest accounts. Okay, like first debentures, 14% one. Like that. Is it clear? Okay. Then what? Then the question is saying D, the amount thus rendered available by the scheme shall be utilized in writing off of goodwill. Okay, the question is specifically telling us write off the goodwill completely. Profit and loss account, loss, yes, we will do that. Debit balance of P&L, and the balance to write off the value of computers. Yeah. So by this sentence we can understand the amount in capital reduction will not be available to write off everything completely. Yes. So that's why they are saying that whatever is left at last, use that to write off the computer. Okay, fine, we'll do that. So how that will happen? Really simple. Check the question. Okay, before checking the question, let's just see how much we have in capital reduction, right? So capital reduction, we have a credit over here of 45 lakhs. Yes, 45 lakhs plus, then again capital reduction got credited over here, 7 lakh. So plus 7, and then what happened? And then capital reduction got credited over here of how much? Of 3 lakh. Yes. So plus 3, that is equal to 55 lakhs. So how much we have in capital reduction? 55 lakhs. Yes. Okay. So debit the capital reduction by 55 lakhs. Okay. Where is it? Yes. Capital reduction account 55 lakhs. Yes. Now what we are going to credit? They said write off the goodwill and debit balance of profit and loss. No. So let's just write off the debit balance of profit and loss first, 20 lakhs. Okay. Profit and loss. Yes. We have credited and we have written it off. Then goodwill we have how much? 20 lakhs. Yes. So to goodwill 20 lakhs. Now see. The third, they said computers. Computers balance is how much in the balance sheet? 25 lakh. The value of computer is 25 lakhs. But do we have 25 lakh left in our capital reduction? No. See, 55 minus 20, how much is left? Only 15 lakh balance is left in capital reduction. So we can't completely write off the computers, but we will write it off partially by 15 lakhs. Okay. So see, 2 computers, 15 lakhs. Balancing figure you have to take, because question said the balance you have to use to write off the computers. See, and the balance to write off the value of computers. Whatever is left, that much we can write off. Is it clear? Simple and straightforward, right? You understood these journal entries, how we pass them. Yes. First, what did we do? First, we made the shares fully paid up, right? And then both the capitals we reduced the face value to rupees 20, scrapped off the old capital and created the new capital at 20. Okay, there we made a gain of 45 lakh. Then regarding Mr. X, first what did we do? Whatever interest is there of Mr. X, we transferred that to their personal account, his personal account, 12 lakh. And then the question said 7 lakh has been waived off, that went to capital reduction. So for that we passed an entry. Then the question said 2 lakh Mr. X brought in cash. Yes, so our liability to Mr. X got increased. Yeah, from 5 lakh it became to 7 lakhs. 12 minus 7, 5. Then again he brought 2, so that became 7 lakh. So now for this 7 lakh we had to issue debentures, isn't it? Yes. So we issued debentures over here. We got 2 lakh, we issued debentures, and then Mr. X completely finished adjustment. Then Mr. Y, what happened? How much was waived off? 3 lakh was waived off. Yes. So this is the waive off entry, the gain that went to capital reduction, and for the remaining 3 lakh we gave 14% first debentures. It's a really simple question. Yeah, the repair limited which was there in your old syllabus, it was quite complicated. Fine. Okay, and then the big entry over here. Now let's just see the balance sheet, right? Let's go to the balance sheet. Now see here, we have the balance sheet after internal reconstruction. Now how to do this? It's really simple. I have been telling you, first check the balance sheet given in the question. Yes, whatever journal entries you have passed under the scheme, give the effect of that in this balance sheet, then automatically you will get the new balance sheet, the post balance sheet. Yes, see, it's really simple. First you will write and reduced at the top, and then let's just go into the question and let's just solve this. See, it's really simple. First we have share capital, note number 1. Yes, we had 50,000 equity shares and 1 lakh equity shares. We still have the same number, but then we have made changes to the face value, isn't it? Yes, so the entire old capital has been cancelled, right? Because we changed the face value. So the new capital is what? 30 lakhs, isn't it? 50,000 shares plus 1 lakh into 20. So that's what we have to take in the new balance sheet as well. 1,50,000 equity shares of 20 each, 30 lakhs. Easy, simple. Then in the question, if you see, we have what? We have reserves and surplus. Reserves and surplus minus 20, it was there. What did we do to this debit balance of profit and loss? We return it off. Yes, but then do we have any capital reserve? Usually in the big entry we get capital reserve, but in this question there was no balance left in capital reduction to be transferred to capital reserve. Yeah, entirely it was utilized, so no capital reserve also. If there is no capital reserve, then reserves and surplus 0, nothing. It will not appear only. Clear? Simple. Then we have seen non-current liabilities, long-term borrowings. Note number 3. How much? 15 lakh. It consists of 12% first debentures and 12% second debentures. 5 lakh, 10 lakh. Have we made any changes to this? Yes, we have. What did we do? We had Mr. X and Mr. Y, right? They had first debentures and second debentures. How much? They had, see, first debentures 3 lakh, 2 lakh, second debentures 7 lakh and 3 lakh. What has happened to their debentures? This 12% ones, we have completely cancelled them, isn't it? In the journal entry you can see we have debited first debenture, second debentures. Yeah, liabilities are being debited, means they are cancelled, isn't it? Mr. X also, see, 12% first debentures, 12% second debentures. So now what you have to do, you have to remove from over here also. See, 12% first debentures 5 lakh, 5 lakh minus 3 minus 2, so it's completely gone. 5 lakh was there in old balance sheet, minus 3 of X minus 2 of Y, so completely gone. Second debentures 10 lakh was there in old balance sheet, and of X it was 7, of Y it was 3, so that also completely gone. Do you understand? These debentures were of Mr. X and Y only, So that is completely gone now. So can we take 0 in long-term borrowings? No. Understand what has happened then. We have issued debentures 14% ones to Mr. X and Y, right? How much did we issue? We issued 7 lakh of debentures to Mr. X and 3 lakh of 14% debentures to Mr. Y. So this we have to show, no? Yeah, this is our liability now. So that is what will come over here. First debentures 10 lakh. Yeah, 7 lakh of Mr. X and 3 lakh of Mr. Y. Is it clear? Simple and straightforward. Yeah, so long-term borrowings you understood? Yes. Then what do we have? After that we have trade payables. Okay, in trade payables what happened? Did we touch trade payables in the scheme of internal reconstruction? Yes. Yes, Mr. X and Y were our creditors also. Yeah, in this trade payable, see, they were 2 lakh and 1 lakh. Yeah, we have cancelled this, so this also we have to remove now. Yeah, so 2 plus 1, that is 3 lakhs. So 3 lakhs we have to remove, no? Yeah, so see, 2 lakh will only come in the new balance sheet. How 2 lakh? Really simple. 5 from the old balance sheet and then 3 lakh we have to subtract, isn't it? Yes, 3 lakh we have to subtract. So 5 minus 3, 2. Easy, simple. That's what happened. Then if we see in the question, in the assets, we have PPE, property, plant and equipment, building and plant. Did we touch building and plant? No, no. 10 lakh as it is, it will come. See, property, plant and equipment, note number 3, building and plant, 10 lakh. Is it clear? No changes over there. Okay, understood. Then we have computers. What happened to computers? 25 lakh. You all know in the big entry, we have written off the computer by 15 lakhs. Yeah, 15 lakhs we have reduced. So that much we will subtract. Yeah, 25 it was there in the old balance sheet. So 25 minus 15. We have reduced by 15. No, 25 minus 15, that is equal to 10 lakh. Do you understand? In total, PP is how much? 30 lakhs. Okay, okay, understood. Then what? Then we have intangible assets, 20 lakhs. What was that? That's goodwill, completely written off. It will not appear in the new balance sheet. But understand, one extra thing will always be there. Mostly in the companies which are on the verge of liquidation, which are going for internal reconstruction, mostly they will not have cash, right? You can see there is no cash in the question. But because of scheme of internal reconstruction, what will happen at the end? You will have cash. So that cash balance you have to properly calculate by going through the journal entries. Yes, so let's see the cash balance. So see here, first entry no cash, second entry yes, we have got cash. How much? 10 lakhs by making the shares fully paid up. Okay, 10 lakhs. And then what? And then any more? No, nothing here, right? Let's just see on the second page. Yes, from X we have got 2 lakhs. So that you have to take 10 lakh plus 2 lakhs. That is 12 lakhs. Is there anything else? No, that's all. Only 2 debits of bank account are there. Yeah, 12 lakhs we have. So that 12 lakhs will come over here. See, cash and cash equivalents 12 lakh. How is this? 10 lakh by making the final call, and 2 lakhs we have got from whom? From the Mr. X. Yes, so that's how it became 12 lakhs. Is it clear? Simple and straightforward. Now if we add 30 plus 10 plus 2, that's 42. Here also it's 42, right? Our balance sheet is getting tallied. Fine. So this is how you have to do it. Really simple. Yeah, nothing difficult. I hope you have understood each and everything. So that's all for this video. See you in the next video. Bye bye.